Welcome to the Weekly Notebook Review. I am Robert McGroarty. This podcast takes on a bit of a different format where we are live each week on Twitter Spaces. I crack open my notebook and review Hedgeye research with anyone who wants to learn a better way to invest. We feature both Hedgeye power users as well as some special guests that might pop in. If you want to learn more about our research, visit hedgeye.com. If you'd like to participate in the live stream, follow me on Twitter at HedgeyeRJM. Now, let's review the data.
All right. It is Wednesday, February 22nd. This is the Weekly Notebook Review. For anybody who's joining us via All Access Week, welcome. This is really for Hedgeye Nation. So we review our notebooks in terms of what we're looking at over the weekend, things that have changed here midweek, and how to prepare going into the back half of the week, next week, next month, next quarter, that kind of thing. So this is really kind of a communal sort of discussion led by a bunch of Hedgeye Jedis, and we welcome all those that are listening in that may be new to this process. But we got a veteran on deck here, Mr. Other Side Asset Management, and so welcome, sir. Thanks for jumping up to speak.
Too kind. You're too kind.
I want to give a big shout out to my big sisters. They are twins and they're turning 45 today. So happy birthday to Jen and Kate. They are absolutely not listening to this, but regardless, wanted to put that out in the ether. Yeah, they're definitely not listening to this, Mitchell.
That's fine.
And there are many in life, right? Many friends of ours, many family members. They could give two shits about the markets and what we do and the passion that we have for deploying the Hedgeye process inside of our own portfolios and that kind of thing. So that's what we're here for. We enjoy this. I had a kind of a day. Well, the kids are off this week. It's school holiday here, a Feb break in Massachusetts, and my folks are in town. But my parents decided that they'd take my two little kiddos up to Portland, Maine, for the night, and take them up to the Children's Museum, do a bunch of different activities up there. But they left around 9 a.m. this morning. I wasn't expecting it for them to leave so early. And so I've had quite a day, and my wife came down. She's working this week, and she came down, Mitchell. She goes, "So what are you going to do? For you got a day off? What are you going to do for fun?" I'm like, "You're kind of looking at it, I was like deep into the notebook. I was writing down notes. I didn't really put many trades in today, but it was pretty funny. It's pretty funny. She was like, "So what are you going to do for fun?" I'm like, I kind of am doing it. It's my every day is fun. So it's really wonderful when you get that opportunity to do that.
Yeah, it's funny because there's weekend work for me. Before I started my weekend work routine, a la Hedgeye, right? No notebook, no weekend work routine, etc. It started off as like a Sunday thing, right? Okay, I'll go down on Sundays, and now I can't tell you how many mornings I think you and I are pinging each other on like Saturday. Saturday at like 8:30 in the morning, it turned into Saturday and Saturday afternoon, and then I've already preloaded the vast majority of my stuff for tomorrow morning. I've already ripped through 4:35, and I've already ripped through every one of my account holdings, day over day, week over week, month over month, and 3 month, plus the whole vol complex already. So I don't know. It's I just want to get better at it. And I think, as you said, plenty of friends who don't care. I've got some friends who I love dearly, who are just like, oh, it'll come back. I've known you for 35 years. I just want to choke you out right now. Like I love them dearly. And hey, it's funny because I'm writing my monthly, as you know, and this isn't going to come across as good as I think the bit of the conclusion sounds, but unless you're aware of something different, then you almost don't know to look for something different. So I like in this monthly, I won't give it away. You guys can read it later. So, But yeah. So notebook review. What you got? What are you looking at?
So rates are at the top of my page, really. The higher high, there's a lot of higher high. Sorry, there are a few key higher highs and a lot of lower highs that, in my opinion, are certainly worth calling out. The move index in particular, it shot up to 119 yesterday, closed in around 118 today. So that's down slightly, but well above trend, as Keith mentioned on the macro show this morning. For those listening in, that trend line is 110. So again, and I hope that that little intro didn't come across as bragging at all. It's just more passion, really. I guess at the end of the day, right,
Oh,
Mitchell?
absolutely.
It's just passion. So
100%.
for many of us, it's just passion. But yeah, rates are top of my page. The dollar is quickly becoming about the only thing you can own. Which is funny. So big shout out to my boy,
Yeah,
FX,
Chris.
aka Chris. Chris, yeah, he called that out last week on the weekly notebook review in terms of wouldn't that be funny if the dollar once again, as we kind of enter in the back half of Q1, becomes the only thing you can own, and that quickly came to fruition this week. So that's the top of my page. And it's not just U.S. rates, and again, I know Keith kind of touched base on this on the macro show this morning, but global rates, right? If you
I was looking.
GB 10-year up to 3.60. I think that's let me just pull that up real fast. It had been so it's knocking on the door in terms of its highs back in late December, which I think was right in at 3.66. So we were above that for a hot second today, but didn't close up there. So the UK 10-year, the German 10-year, the Japanese 10-year, they're defending that bad boy, and just the volatility component as well, right? The VIX's pulled off a little bit, but back up at 28.
Yes.
RVX is at 26. VIX, excuse me, at just north of 22 or 22.28. So all these things again, VIX 22 that's still the low end of the chop bucket, right? But we just hadn't really seen that number or that kind of vol explosion. And Keith did a phenomenal job explaining that complex, which I've tried to talk about on the weekly notebook review and certainly in the beginner's guide myself as well. But of course, leave it to the big man, coach, to really narrow it down in terms of how price, volume, and volatility and the measures or the explosion of VIX from 18 to 23 is totally different from VIX to like 18 to 19, 18 to 19 or 18 to 20.
Yeah,
I love that.
What it sounds to me like you're talking about is basically all of global macro, like the guts of global macro, minus like the equity complex, right? So if you look at everything that we're looking at, I mean,
notice I haven't said one fucking thing about the SPAs or QQs yet, or
correct,
XLK or XLY.
So I noticed, this morning in my notebook was the higher high and higher at the higher low and higher high.
You still there, buddy? I lost him. Can somebody give me a thumbs up if they can hear him? All right. So Syracuse give me a thumbs down. So that means cannot hear Mitchell. Thanks, guys. That was a little delayed. Mitchell, maybe drop off and
Robert, I couldn't hear you. Can you hear me?
Oh, now you're back.
All right,
now
I apologize.
Yep. No worries.
A call started coming in on my phone, and I X'd out real quick.
Oh yeah, that happens. So sorry. Yeah, global macro.
Did I lose you at the dollar? Go back to the beginning. Did I lose you at the dollar?
Pretty much right at the beginning. So let's go back to global macro. No good. No worries.
I apologize. Yeah. So USD higher highs, higher lows. USD JPY getting close to the top end of its range. Euro USD close to the low end of the range. So I'm doing my absolute best to exercise as much patience trying to reload and get larger on some of these things as I don't want to, fear missing out, FOMO on these things moving, because we've seen a couple times with a lot of when these paradigm shifts happen, or these, the money comes back into certain areas. You saw it with gold when gold really went on its first run before it's now taken its breather down to the, getting close to the trend line, right? it just seemed as if gold every day, boom, it was up, boom, it was up, boom, it was up. So I don't want to get, I don't want to chase. I did buy some dollar this morning when it was down. So, I made out well on that entry point, and we'll see how that, how that fares. Your points to the vol complex, you've got, this morning you had VIX, VVIX, up 9 day over day, 15 week over week, and up 17 month over month. So that complex is moving higher. And even with today's little bit of a pullback on a week over week and month over month basis, you still have them positive. Move did pull back, as you noted. That whole trade is very interesting to me because gold is getting near the low end of its range. Treasuries, the treasury complex, it has higher highs in the ranges. I'm curious as to whether or not markets pick up on the gold dollar both moving higher at the same time. It started to do that this morning before gold did sell off a little bit. Even with rates up, gold was up a little bit this morning. In terms of equities, gold itself, if I'm not mistaken, was up on the day, right? GLD, no, down 56 bips, but it was up earlier today. With treasuries with yields coming off a little bit, and then as yields moved higher or lower, it sold off, right? So, I'm just I'm curious to see how that whole trade works and whether or not Chris is right as to whether or not we get into a traditional quad four, or if we get into a very similar quad four to what we saw prior to or at the beginning of last year. And George Syracuse and I went back and forth a little bit on that normal quad four. So I'm going to be very diligent with cutting things when they hit or break trend. I did sell my GDX yesterday when it broke trend, so I know Keith still has some, and he sold a bit, but he's being a little bit more patient. I'm out of my GDX, I'm out of my GDXJ, I'm out of my SIL, my SILV. Last week I talked about how I did have some duration on. I have less on today, but I still do have some on, but a 3.5% position isn't going to be the end of me, split across a couple things. So I'm looking for the traditional quad four to play out. At the same time, I'll follow the signal.
Yeah, no, and that dollar, basically we've talked about this a couple times, and certainly in hindsight, if you go back and look at the gold, chart back from post its big time move higher in November, there's some brief periods of consolidation there that if you weren't there and they weren't quite at the, they certainly didn't get to the bottom end of the risk range, but that setup is certainly one where, excuse me, I got a cough. 1 second. That's that kind of anticipation for the dollar, the DXY, kind of having a game plan there around where are you going to get comfortable stepping in. I think is going to be really key over the next few weeks, because I'm sure there will be some down some down days, even if they are slight. So again, it's just got to be understanding in terms from your own risk management and portfolio construction standpoint. What are you going to do with those days? Do you need to add more? What's the max sizing that you wish to be? What is your measure of signal strength there? But certainly the dollar, which is again, I kind of chuckled last week, but I think it was about 2 weeks ago, that the dollar was testing tail duration, and now it's probably one of the strongest signals on the board in terms of positive signal strength. So that's a big one. But again, at the same time, though, over the weekend. This is going to be slightly different now, but the DXY was still down minus 2.7% on a 3-month basis and up 1.4% on a 1-month basis. So, you do have a bit, again, it hasn't quite regained 3-month price momentum. Now that is, that's different from kind of like trend duration, all that kind of stuff. But just from a pricing standpoint, those highs basically from the end of the year the end of November are soon to fall out of the look back window, and then you get into that band where it kind of traded around 105 and a half to kind of 104 there going into the end of 2022 and to start the year of 2023. So that's an interesting thing because that 3 month look back window will start to be a lot easier in terms of regaining that 3 month price momentum. So just keep an eye on that, and it's gonna so just keep an eye there. But I think that's a big move or a big decision that you have to make, right, within your own portfolios. Like, what's your current sizing and how how are you going to tackle that from to using your example this morning, right, Mitchell, in terms of adding some on a little bit of red and that working out. So I think just being proactive there, and gold conversely is similar thing, right, where you could get if you get a little dollar weakness, the inverse correlation as of this morning on a 15-day basis on gold is negative 0.89. So not quite as strong as it had been. It had been kind of creeping or pretty much staying around 0.95 or something between 0.90 and 0.95. I mean, still quite high. And if you go back, deeper out in time, it is negative 0.96 on a 30-day and negative 0.95 on a 90-day. So that correlation will be interesting. I'm definitely keenly watching that one. The dollar inverse correlations to the SPX and CRB have burnt off a little bit, certainly on a more of a shorter term time frame. So that's something that was kind of highlighted this morning in my notebook, and I think something to be cognizant about, because if you all have been loading up on gold, I wouldn't be surprised to see Coach probably lightening up maybe a little bit faster and just letting that gold signal kind of reconfirm and get back into a stronger signal strength, but still very much above trend. The last trend line I had on gold, I think, is 1806 if memory serves. 1803. Pardon me, 1803. So that's well above trend line at 1834, and certainly near the low end of the risk range though at 1830. So that's definitely again, U.S. dollars top of the range, gold's at the bottom of the range. Kind of trim some and rotate, right? Prudent plan.
Yeah, exactly.
Yeah. So that's kind of most of the main things I've gotten on my page today. Volume obviously has been picking up too on some down days, so that's a big one to note. Keith reviewed that on the macro show. I would definitely go rewatch that if you have access to it. And again, on All Access Week, anybody who is trialing out things, it's a great one. Today's show is awesome, and I'd highly recommend going back and rewatching that.
Today's coaching hour or whatever it was.
Yep.
Yeah, where he went through the slides with the updated slides. It was almost better than when he went through it the first time, as he walked people through, I think, the cycle more as to how the cycle happens, and walked people through the consumer more. It just, the hardest part is being bearish, right, and being as bearish as they are, but getting that, thinking both sides, right? You're bearish, but with implied vol premiums starting to show, pick back up, and things down towards the low end of the ranges. Don't get over your skis in your shorts. Play the ranges, and when you're trimming, sell to your min, and then just stay there. And if that's where you are at this point in time, right? So.
Mm-hmm. Yeah, no, I think it's exactly right. And the vol premium is a big one, right? Like XLV's at +3 as of this morning. Let's put +3 times on trailing 12-month Z-score. So at that +57%, that was a big one. Again, going off of your component there, Mitchell, in terms of our some of the traditional quad four equities going to kind of start working again, which would be consumer staples and certainly healthcare. And with healthcare with a huge eyeball premium, certainly on a 12, a trailing 12-month Z score, that was circled. Now, it is neutral on the page on the pin sheet again, which is interesting, right? So, neutral on the pin sheet, eyeball premium on the eyeball table, and kind of near what the last kind of low end of the risk range that we had, which was around 130 here. Now again, that's about a week or so old since we've had that, but certainly something to be noting. And if you get a little bit of green on the screen there in healthcare, and it maintains and sort of moves back up to positive bullish trend, then that's is one of these things where it's a telling sign. So yeah. Well, on we can open it up, Mitchell. I know you've got got another kind of half hour or so, but why don't we open it up to the group? We've got see a lot of friendly faces out there. Unless you've got something else to mention here, Mitchell.
No. Please open it up.
Yeah, let's do it.
I like listening to other people talk over me.
Me too. I'm fighting a little bit of a cold here, so sorry for the weird voice and the sniffles. But gotta power through it. So what the top three sectors today were materials, consumer discretionary, and comms. Those are all green on the screen, along with a little software, home builders, retail, MLPs down in the U.S. industries. So those would have been the top four down there. XLK. So again, kind of a little bit of a reverse. Let's see the quad. Let's see what outperformed today on the quad basis. So quad two longs were kind of plus 1 basis point, and most of the quad 1, 2, and 3 shorts made money today. So kind of a bit of a nothing like quad 4 general names in terms of your longs and shorts kind of underperformed today at minus 19 basis points, but relatively kind of like a flat day out there for most assets, for kind of most of the quad 4 baskets. But yeah. All right, well, you guys just don't all jump up here at once. I guess I'll just keep asking Mitchell and myself questions. So we got high yield, and junk, right? We talk about that one a lot, Mitchell. All right, there we go. We got Arthur's coming up. Now I won't have to filibuster.
Well, we didn't even touch on high yield, but yeah,
that's what I was going to.
Yeah, that was coincidental, Arthur.
Robert always waits for me on high yield. Yeah.
No, I didn't even see you, dude. I didn't even. Well, I mean, I saw you, but then I just. It was something that I circled over the weekend.
Yeah.
Was U.S. high yield. So
I'm down. I'm down to minimum now, but I was hot and heavy in it. But I went down to minimum. I think it was it yesterday?
Yeah, yesterday last week, right?
Down
yeah, okay. Yeah, you said you've been lightening up last week.
Yeah. So we're down to minimum. Covered Bido today with the chief, but I didn't lose as much as he did on it because I was hitting it because I get frustrated because I don't see the macro pro every day. So when he's got something on, and I'm kind of winging it myself, which is you learn. So I mean, when it gets, I got the tracker. So
short BTC, yeah.
So hitting it, and got out today and about broke even on it. But I was glad to do that actually because it was that thing was squeezed so terrible. But Bitcoin itself, interesting. It's it can't get through 25. Every time it's 25, it just gets slammed. And looks weak to me. I mean, looks the volatility range is widening, and I don't have any right now. I'm just watching it with the tracker because Drake does and whoever else, Drago, does such a good job on that thing with all that information. It's something I like to follow. But today was for me. a lot of Brownian motion. I mean, it's like if you want to define what that is, it's kind of like today. I mean, there's noise everywhere. I mean, noise, my God. And really, if you looked at least what I was looking at, not a whole lot happening. I mean, the dollar was, you guys already hit on it heavy. I mean, that was interesting. I'm long some dollars and I'm long gold. But I've got very little on at this stage of the game, and I'm just hoping for some more shots. So I'm letting time and space run along, and when you don't think you're going to get a price, you'll see it if you wait. And so that's kind of what I'm doing today. Minimums on all my core longs, minimum on my core shorts, and waiting, see what happens. I don't know if that sounds familiar to how other folks are feeling, but that's kind of what I'm seeing right now.
Yeah, I would echo that, Arthur. I mean, what the VIX risk range was about was 18.31 to 23.74 today. We almost ticked the top of that number and closed down on 22.28. So that again, like that number is not it's obviously vol has spiked, right? And we've gotten a big move in volatility, which is impacting eyeball, the eyeball, premiums and discounts. It's impacting, the SPX risk range, all that kind of thing. But
what was other interesting to know, Robert, is the ODTEs on the put side today winning on as far as
yeah, exactly.
So
exactly.
and then
they do go both ways,
and the VIX
right?
going up, huh?
Yeah, exactly. So no, that's the interesting part. At one point, I think SPX was up, because they hit the 400.
Yeah.
The 400 calls. So SPX was up, but VIX was up at the same time, and then and so now VIX anyway. But VIX down.
I still
SPX
don't
down.
understand that correlation or what it is or how to actually figure it out. But I just kind of watch it as an interesting kind of thing. Whether it's suppressing it, as it was doing the big call side of the last couple of weeks, was it suppressing it, and if so, how much and whatever. But But that's it. That's really it. I mean, gold. I'm very, interested in why I'm watching that like a hawk. 1830 sitting down there. You got the dollar at the top end of the range. I know I'm repeating, but I mean, are we going to get a kind of a divergence on that correlation? I know what was a week ago or whenever. Keith was mentioning something about maybe that happening later on in quad 4, or keeping his eye on that correlation. Mm-hmm. I know it went down a little bit, like you said, to 89 or whatever it was. It was 90, 93. But we'll see. But that's kind of where I'm at. And of course, I said last week on this call, if anyone picked up on it, I mean, when the signal came TLE or TLT, I should say, when the sell on RT, or I think it wasn't on RT. I can't remember where the signal came from.
Took it off of ATO Pro.
Okay, yeah, that's what he did. And I said on here, I said, I'm gone, and I'm so glad. I mean, there's a good example of making a move, right? I was out. I'm holding nothing. I'm out of here. Because he's been really touchy on that one in terms of not waiting around. He seems to think he's got the signal on that, and he has, in terms of getting in and getting out when it's time to get out. I think he's gotten out at the right time about, I think, 3 times over the last year at least, and it's been the right call. So I was out of there.
It's 3 times in the last year. I had a client say to me the other day, "This is the 3rd time you've bought duration in the past year." I said, "Yes, it is. Yes, it is. And we might be out of it sooner than you think." But you're right on that one.
So anyway,
so I just pulled up the 5-year on the 5-year look, like the 5-year chart on the move, right, on the move index, and again, I'm massively rounding things off here, but call it 40 to 90 in terms of kind of general range on the move. And we basically took a cup of coffee below 100, and so I think that's a big thing too. There, Arthur, is just with elevated volatility inside of the fixed income space, and in particular the U.S. Treasury market. When you make a decision when things break, you really got to you got to make that decision. Either you're holding it for like a more longer term, and you're like, okay, I'm going to kind of maybe dollar cost average or what have you in TLT, and basically in anticipation of the long end of the curve, kind of reflecting recession risk rising, or you just do what we would certainly more so coach, which is pivot, get out, and reassess when the kind of signal kind of reconfirms its positive trend, right? So that's a big. I think that's a big component of that of the reason where the Keith basically when he pivots, and then it doesn't always happen that way, right? But like when you got movement, that's exploded from 100 to almost 120. That definitely impacts pricing. And the other
two
thing too,
areas.
Sorry,
two areas. Shifting gears on you a little bit here, Robert. That I want maybe some people are watching too and can help me out or comment on is Europe and China. I mean, Europe is just a mess. It's a shit show, and and it looks like the DAX and a few other things over there seem to be at the top end of their range. But I mean, they're hanging in there. And I mean, like you said on this morning tweet rant, I call it the tweet rant. In the morning, I love getting up. The first thing I do is get his tweet rant and it's rates, like you say, globally all over. Rates are going up, and I think Lagarde came out yesterday or today or whenever and said I'm going higher, longer and higher than people think. I mean, but the equities seem to be hanging in there. Keith made a side remark or a little remark on Europe. I don't know what he's waiting for. Must be the signal he's not getting it yet. So I'm watching that, and of course, I think he's waiting in China. We're waiting on there's a bunch of earnings. I think BABA comes out tomorrow, whenever it does. Waiting on KWeb, and of course he's got Hong Kong sitting out there in RTA, which I've been touching on it. You got to touch on that stuff when it gets low. It's been hanging in there. So I don't know if anyone's got some comments on Europe and or China at this point.
Yeah, definitely happy to review it. When you mention that, my brain immediately goes to the Euro USD and just how that sort of kind of has only recently reconfirmed its weakness. Not reconfirmed, but it's always been it's been bearish trend, but certainly kind of putting in lower highs and lower lows, and I think that's a big component there, right? So perhaps he's looking for kind of just a further breakdown in the euro, and or perhaps a continuation of that, or just sort of like a quote unquote event that may have the euro spike and therefore push some of the European shorts that we had enjoyed or had on inside of the portfolio early last year in terms of like Italy and EUFN for the European financials and that kind of thing. That could be one component there is just sort of the Euro USD shift that has occurred really in the last kind of week. And then with China, it's kind of, again, EM and USD historically certainly do have a correlation, right?
Yeah.
Even though the Chinese data keeps being quite good in terms of what's been coming out of China in terms of shipping rates and stuff like that. I know that those came out, I believe, this morning or yesterday. So yeah, I mean, the Quad 1 data is certainly flowing out of China, and I think it'll just be we'll have to kind of wait and watch on that one to see how it plays out. But nail on the head there in terms of low to the risk range, and that's where you can use the ETF Pro trend ranges, right? To your advantage to kind of pick away slowly at those positions. And
it looks as though a lot of China money is going to the recently added EWS. So that's been one.
Singapore.
Yeah. been
Yep.
watching that. So illiquid though, it's hard for me sometimes to do things that I want. But anyway, call that out relative to China too.
Yeah, for sure. And the other, so just going back to your commentary about volatility, I mean, it was just a week ago that low end of the risk range was 17.91, and the top end was 21.44.
On
So
what?
on the VIX,
Oh,
so
I thought you were
17
saying
spot.
EWS went, wow, that thing moved.
No, 17.91. Yeah, so just going back to on VIX, and now you got the low end at 18.31, and the top end at 23.74. So that's a week over week. I mean, again, that's looking at things day over day and week over week, to me, can really give you a good picture. And oftentimes on these Wednesday nights, I do that. I certainly do that over the weekend, but definitely kind of the thing there with the VIX though, and the other, to take it kind of one step further, is that low end of the risk range is still below the trend line. So that trend line is 19.11 is the last one that I have from Keith. And so that is interesting, right? So like 18.31 is below that trend. So that's where I think kind of playing it, to your point, Arthur, about kind of being a little bit patient, waiting for, again, not sure we'll get all the way to the top end of the risk range on the SPX or Qs or what have you, but just kind of being nimble, right? And being patient and, just not having to, hit the buttons in kind of like the middle of the ranges and that kind of thing. And that's important. I started watching Full Swing on Netflix. I'm a huge golf fan, so it's been a great documentary, docu-series, whatever, on the PGA Tour and Live. And so I'd highly recommend any golf fans out there, if you're itching to hit a button, go hit a button on your Netflix and go watch Full Swing. But that again, the Brownian motion, staying patient, kind of it's a big component of trying to risk manage your portfolio appropriately. But David, welcome. I know you popped up. I don't know if you got any. You're pretty. You're not pretty. You're a very well-rounded global macro guy. Any commentary on your side on Europe and or China? And
yeah. So I mean, I have been adding a little to my my K-Web position at these levels. I do find it interesting how much has been flowing into Shanghai. I have been really focusing a lot on gold right now with GVs. Can I get off track a little, or do you want to stay on Europe and China?
No, David, 100%. No, roll with it, baby. Roll with it.
I think GVG closed out today at like 1505. Gold's near the trend line, and the risk it's more or less at the bottom of the risk range. Now the strength of the risk range signal has weakened. Obviously, it's not making higher lows and higher highs right now. So so what I do is, like, let's say we're more, it's hard to have your cake and eat it too. You want to buy it at trend when it's still bullish on the risk range signal, but you also want to buy it at the bottom of the risk range signal when it's strengthening. So you kind of, it's hard. You can make a real score, it seems. You can really do well when you have it and it's still bullish and you're buying it at trend. But where you want to be big in it is when it gets to the top of the range and then have the patience to sell it. But when Keith sold it, I don't know if it was like 2 weeks ago or something in RTA, and I took profits at that time too. It's affording me the ability to buy it at trend now while it's still bullish. Now I'm not at a max position. I was pretty much down to my minimum position of like 2%, and I'm just building it back here. And I'm not going to bring it up to 8 or 9%, which is where I get it to, unless the strength of the risk range signal really improves. So I think just being patient. I mean, like right now, with where we are, I think what we've learned so far this year, and I guess I should have probably known it last year, but doesn't always work like that. Is really trade the market you have, not the market you want. When in late December, when the VIX was getting into 25 category, territory, you're thinking, when we might exit the chop bucket for the better if you're bearish. And it really didn't happen. VIX got down to 18 or high 17s, I suppose. That's kind of been a signal to me, at least, to to just have less exposure. So I think like a week into the year when the VIX was having, just being suppressed, I didn't really know what was going on. It was before Mike Taylor started talking about Yellen and the treasury and what they're doing, and then the ODT option conversation, has been kind of a mainstay the last few weeks. But it was before all that. It just, didn't really make sense in the context of a quad four. So I was just reducing exposure. But now, I think you have to really look at the VIX. The VIX range, like you said, has moved up. Bottom end is 1831, and the top end is the high 23s. But trade the market you have, not the market you want. So what I would say is just I've been keeping my net pretty tight, my gross pretty small in this kind of area between the chop and the F bucket, or between the investment bucket and the chop bucket at these kind of transition periods. And unless the VIX range really goes up, I'm just keeping my short position small, pretty small. And I like to go big, but I've been trying to weigh the market dynamics and where the VIX risk range is with what the market's actually doing. I think that's been the hardest part, but I think it's it's been very important.
Yeah, no, great, really good commentary, David, as usual. And there's still positive areas. Grid is one. ITA has been awesome.
ITA is strong, very strong.
Yeah, ITA and one that has sneaked up on me in the last week or so has been 2 weeks. Has been SLX, the steel. Has been just keeps kind of making higher highs. It's pulled back here along with much of the kind of industrials complex, but SLX I'd throw back on some folks' radar, and even XME looks a little bit different than GDX for whatever reason, and so I think that's there are places to hunt. Grid,
Yeah.
I think the grid I mentioned already, right? So, but ITA, Coach added kind of VIG the other day, last week.
Nobody's buying natural gas out there right now. Come on, David. Just like you say, you want to go big.
Yeah.
David.
If Jonesy Bud's not taking a shot at $2, I'm probably not. I will say, I will say, it is interesting. In August, you had that industrial metals complex, and you're like a U.S. Steel, like an X, or like the ETF you mentioned, Robert.
Yep.
They were considerably weaker. That and copper and the industrial complex has firmed up a lot in the past 6 months. A lot.
Yeah.
Now those were pretty good shorts over the summer.
Oh, absolutely, and it could be kind of late cycle, pricing, right? Especially on the industrials and materials side. Yeah,
no
that
doubt.
would be. Pardon? Oh.
No, I was saying absolutely, yeah.
Yeah. So it could be some late cycle pricing, right? That's kind of flowing through earnings and that kind of thing. So that's where I am a little not hesitant is not the right word, because at the end of the day, it's a signal, but yeah. So and SLX too. Again, a number of the even COPEX has jumped out, right? And copper is bullish trend in terms of the actual commodity itself, not COPEX, but those are copper miners, and we've had a lot of these miners on the book, but but COPEX hadn't really made it back on there for a minute, but again, this is where my brain goes to. So when Coach has sort of GDX or SIL and that kind of thing, you can I really try to kind of go and broaden the net a little bit and go to other components and even express like HG in terms of in terms of the copper futures contract in equities terms. And so so again, I mean, COPEX not as robust as certainly ITA, that kind of thing, but certainly one that could be put on your radar. But yeah.
One other quick thing I wanted to mention, if that's cool.
Yeah, of course.
It's a small call out, but I'm sure a lot of people saw it when they were looking at the risk ranges the last week or two, and it might have been mentioned. I wasn't on the beginning of this call, but Apple, obviously, it's 7% or so of the S&P 500 index, and a week or so ago it went to bullish, stayed there for a couple of days, is back to neutral now, and it just very reminiscent, and you get a little beautiful mind looking for similar sets these days with all that going around. But definitely interesting. The last couple of drawn out bear market rallies. I certainly in August, Apple was back to bullish for a little while, like you might say, took a cup of coffee in bullish territory, while the S&P stayed bearish, bearish, and kind of was more or less the top of the market. And if it holds true again, when the S&P was at 4180 or 4200 last week, and I know Apple was bullish for a couple of days, went from bearish to neutral to bullish, then today's back to neutral. So certainly not the end all be all, but for such an important bellwether or such a big tech company, it was the third mega cap. Meta and Netflix have been bullish for a while, certainly, but just Apple kind of getting bullish for a short period of time and losing a lot of that signal strength recently, I think is interesting.
Yeah, no, great call out, and certainly, great call out, because big component not only S&P, but huge component also inside of XLK. Yep. So, really, really good call out. And you're spot on. I think I mentioned this last week, but just where, we had seen on a number, whether it was kind of the March rally or March to April rally, and the June, July, or July, August rally. I remember, I have to look specifically, but I remember certainly Apple was bullish. I think Microsoft got bullish there for a minute, and maybe even Amazon or Tesla as well. I mean, I remember it kind of almost hit a few of the big boys, and then all of a sudden it was, the bottom dropped out, and we, but great call out on the Apple.
Thank you. I also find it very interesting that the two big tech companies that have been bullish for a while, for at least I would say 3 to 5 weeks probably. I would guess if I had to kind of go back at least. Meta and Netflix have been the most beaten down mega cap tech. What's Apple off? A third. What's some of those stocks are down like 25 to 40% from the high.
Exactly.
And then Meta's down. Is it down 70%?
Yeah, something like that. I'm pulling it up now. 1 second.
And is Netflix down 70%? I mean, more or less.
More or less, yeah.
Yeah. So they're down an order of magnitude greater than the Alphabets, Amazons, Apples, and perhaps even Tesla. I find that interesting. I mean, the ones that there were some beaten down companies right now. On one hand, I'm trying to wait to build positions in some stocks for the longer term, but I am still slightly net short. So I'm just, it's definitely some interesting stocks though on the long side. I know it might be a little sacrilegious in the middle of a quad four, but there are definitely some interesting companies. But just thought Apple was an interesting call out because that was
absolutely. Meta. I was just kind of concluding. Meta is down about 55% from the November peak, and Netflix is about 51. So call it about 50.
Okay.
And Apple, not even
a third.
Remotely, not even remote. It's really close to that. Hold on.
Probably like 30% or something like that.
18. Yeah.
Wow.
So that was. Wait, hold on. Yeah, that's right. Yeah, January. I think it peaked around January.
It was probably down early at the low last fall.
At the lows, it was down 31%. That's correct. Yeah, but it's had a big rally, big move in year to date really, and now only down about 18%. So, I actually hadn't done that math in a minute. I typically look at kind of the larger or the indices themselves, right? And so I did have that, the XLK, for instance, 3 years plus 37% on a 1 year basis, down 9.2. So I had looked at it that way, but I hadn't looked at it on the Apple individually. But no, great call out, man. Great call out.
Thanks. I'm driving in Rhode Island, and for the first time in a couple of months, we're getting some snow, so I'm going to mute myself so I don't crash.
All right, sounds good, buddy. Yeah,
have a good week, everyone.
Yeah, you too, man. Thank you
so much, Robert. Appreciate it.
You got it, boss. Yeah, I think we're supposed to get like 6 to 9 inches here in my neck of the woods next 24 hours. It should be a lot of fun. Mr. Stasner FX, I saw you jumped on. Don't know if that was around the euro or if it was me talking miners. Steel. What, did you get inspired? Did you get inspired by my SLX talk? Am I talking sexy to you, Moyer?
Yeah, I want to short that though, but yeah.
Yeah, you do.
No, I was thinking about Keith. Kind of made I don't know if he made any of the further comments in the extra little bit that he did today. I didn't get to watch that today, but he made a little comment about Europe, but he knows where he wants to go later, and I think he was referring on the short side. I don't know, but so obviously banking is a big part of the UK stock market, but two banks listed in the UK but have massive Asia business is Standard and Chartered and HSBC. Since the October lows, but from the bounce at the end of October, both of those banks, which make like 5 and 6% of the FTSE 100, are up 45%. So the FTSE 100 is making all-time highs. But if you drill down a layer and go down into the actual financials subsector, that's kind of making a lower high right here. So yeah, just wanted to. The pound, I'm short the pound, but really small at the minute. I think we could get a little pullback in the dollar, just to kind of, now that everyone's talking about the dollar, so we'll see. People might get a few better entry points, but yeah, no. It was just, I was just having a flick through some charts, and I was like, holy shit, these banks are up like nearly 50% in 3 months. Yeah.
Yeah, I mean, I actually didn't realize that piece about the FTSE because it was. I struggled with that this weekend. I mean, again, I don't know where it's traded the last couple of days, but this weekend, I mean, it's up like 7.5% year to date. It's up 7 point, a little more than that, almost 8% on a 3-year basis. I mean, it's held in there nicely. But so's all of Europe, like DAX, CAC 40. It's been.
I don't know if you remember, but this time, probably January last year, I was in this kind of position where I was like, well, obviously quad 4's coming. And at that time, it must have been around here, like February, March. The S&P and stuff had some pretty big sell-offs. And I was like, I really don't know what to do about things that are in my pension, because the FTSE is still kind of doing well. But here we are still a year on, and the FTSE is making all-time highs like a week ago.
Yeah, exactly.
But yeah, I think maybe moving forward, it's time to kind of take some chips off the table, maybe.
Yeah, we'll have to see. That pound action could be a big be leading indicator in terms of the GBP versus the USD.
Yeah, I think like if kind of the bit on the shorts, like I've really not been able to short much in the US recently, because it goes both ways. So like if obviously being non-dollar denominated, if I say put a short on the S&P and it goes against me by 1%, while at the same time the dollar goes down against the pound, I lose out twice. So let's say the pound goes up 1% against the dollar, then I lose 1% in my short that I got wrong, and 1% in the FX, because effectively I've swapped pounds into dollars to put my short on. So even though the S&P's gone 1% against me, I'm down 2%. So for long periods of time, I had to time not only getting the short right, but getting the dollar right, because by putting that trade on, I'm making an FX trade by swapping my pounds into dollars to put the short on.
Yeah, that makes sense.
So if you do start to get, obviously if you're big enough, like obviously you can hedge those kind of things, but that's not my bag. I'm not big enough to do that. But if you do get some dollar strength, then non-US are able to come in and start making those trades again without having, without going on a losing trade.
Yeah,
like I say, if you put a short on and it's flat, but the pound has gone up, then you've lost money, even though the short's flat.
Yeah, that makes sense. Makes sense. Does that typically impact, or where do you see that impact the most from kind of like a asset flow standpoint? Is it primarily just the European funds, I'd assume?
Well, yeah. So basically, like if you look at so say for instance, Arthur brought up EWS, right? So if you put EWS on the chart and then put the dollar against reverse it. So the Singapore dollar against the USD, the chart's basically the same. So what you're doing is you're putting an FX trade on by going long an ETF. It's basically, someone asked about they were trying to look for a Mexican peso ETF, which there isn't one.
Yeah, you're going back in time. That was like this summer.
No. Someone asked about it a couple of days ago.
Effectively
the same thing. So the same thing. If you put Singapore dollar against the USD against the EWS ETF, it's just the same. It's the same line. So if you're looking for the Mexican peso, you can effectively go long the EWW, because I'm not saying you should do that right now, but it's the equivalent of going long EWW because you're swapping dollars into Mexican companies, by owning the companies. But I'm not saying do that, but yeah,
that makes sense. Yeah, there's no. I didn't see that. Was that in the arena or something?
In the Twitter group.
Oh, got it. I missed that.
I forgot I'm still a moderator of that.
Yeah, you are. I suckered you into that thing.
No, but other than that, it's just kind of waiting and seeing at the minute. So I'm short the pound, pretty small. Got some S&P shorts on, but
are you seeing anything interesting in the commodity complex out of curiosity?
Copper did look interesting, but with the dollar, obviously, it's kind of again in a wait and see.
Yeah,
I'm not jumping into anything because I think like pretty much everyone has said the dollar's at the top end of the range, so you could see a bit of a pullback here and get some better entries. But the towards the end of coming into the US, the oil had a bit of a rally coming into the US Open, but then like completely sold off and was down like 2.5%, 3% by the end of the day. So
I closed down about 3%. Yeah.
So that was it always made me laugh when about like crypto traders and stuff used to always really focus on like, what are the Yanks going to do when they come online? It was always really funny, but it was so it had a bit of oil had a bit of a rally into you guys are opening and then sell it off by 3%. Great.
Yeah. Bitcoin, I saw you tweet over the weekend about getting prepared for crypto mania of 2024. Did you end up finding a podcast out there? Any recommendations? I don't know. I just saw your tweet. And so anybody listening in, if you got any recommendations for a non-wanker, Bitcoin going to the moon and back again, and then to the outer galaxies, let us know, because again, it is always good to get educated and kind of learn from
Yeah, no,
others.
I've just
But
been. It's been well since what, September, October 21. I haven't really touched on it. I haven't really looked. I don't short it. That's not really my bag. That's a bit too, even for me, that's a bit too scary shorting crypto. So I just leave it alone and just don't. And then yeah, so eventually something might be left by the time we get out of this. So yeah, I'm just getting ready and just building everything now so that when it does come back, I've got everything ready and I'm not on my heels trying to chase it.
yeah, makes
But
sense.
who knows when it will be, right?
Yeah, absolutely.
Maybe it's now. Maybe it is right now, and I'm missing it right now.
Yep. Bitcoin to the moon, 25,000. 25,000. That line in the sand just keeps getting banged on. Yeah, I think Arthur, you mentioned that, right? I mean, just there's a wallop of sellers that are coming in, and I think I think it was last week. Leslie mentioned something around that, just how there's just a wall and a lot of folks that might have kind of added in or sorry, let me pull up the chart that way I'm not mistiming the time frame. Yeah, back in kind of in August, we're kind of right back at those levels. So those folks that were kind of buying in at that prior lows of the late summer, indoor, this is kind of their exit. They're getting out break even. So either you're hodling, and you're not a seller, but it certainly seems like there's a lot of sellers here at the right at this kind of similar. The similar sets are real. So I think that was Leslie last week that mentioned that on Bitcoin. If it wasn't last week, it was the week before. But that was a good analogy. Or not analogy. A good call up.
A couple of other ones, though. A lot of the smaller coins are all breaking out. So yeah, we'll see.
Interesting. Cool. Well, we're running up on kind of like the hour here, so why don't we? If anybody out in the crowd, either if you're new, if you're participating in All Access Week and you're joining in and wish to sort of review any of the product sets from Hedgeye, that's cool. But also, you just got any questions? Anybody just got any questions, or whether you're a seasoned vet or kind of new to Hedgeye, why don't we jump on up and then and if we don't have much, we can kind of like wrap up. I think we did a great job covering a bunch of what's going on out there. And as I mentioned at the beginning of the call, my folks are in Portland, Maine with my two little kids, and that rarely happens that the house is quiet and I can hang out with my wife. And don't have dirty minds though, Arthur and Chris, all right? It's just
and here you are with us.
Exactly. This is how much I love you guys. Well, this is how much I love this, really. But yeah. I don't think you joined yet, Chris, but I mentioned to Mitchell that she came down. They left her. My parents. I wasn't expecting them to leave so early. They left around 9, and she came down kind of late morning, and she's like, "So, what are you gonna do like today? It's not often you kind of a day off or a light day with work, and you can kind of do whatever." And I looked at her and I was like, "I'm kind of doing it." And she was like, "You're a loser." Love you too, Jody. Love you too. But it's pretty funny. This is certainly what I love. It's what many on this call love. It's a fun game that we play. Game 35 today. It was game 35. All right, well, if we don't get anybody jumping up, I know Trillion Capital, you had a question in the commentary last week, and something happened. I don't know what happened with Twitter, so sorry about that, buddy. But feel free to jump up next time, what have you. But maybe we'll just wrap up with that. And there you go, Trillion Capital's back. Trillion.
Hello, how's it going?
I'm good, man. Sorry about last week or week before.
I think it was when Twitter went down, actually. So no worries.
Yeah. All right.
So I just wanted to say, I really appreciate all the work you do, and you fill in a lot of blanks that I just really, really appreciate it all. I'll leave it at that.
Thank you.
But so I just had a question. You guys are talking about Bitcoin and that now. I shorted at the top end of the range today. Had some success. Uh, it was very good, very good move. Now I was just curious when something goes off the top end of the range like that and then it comes crashing down. Do you guys have any? Uh, I'm not very good at not experienced shorting very well. So when it comes down off that top end of the range, now is that should I be covering, or is this something that you guys you usually cover right away, and then see if it retraces, or what's the strategy you guys employ when you're shorting from the top end of the range like that? Thanks.
Yeah, of course, Julian. Chris, do you have any commentary there?
Um,
Put on your old school Hedgeye hat, all right?
yeah, okay. No, so
I think, Trillion, I think Bitcoin is a bit of a unique beast, to be honest. I don't know, Chris. Are you cool commenting on Bitcoin, or do you want to pivot to
yeah,
something
so
that's like maybe a bit?
yeah, I don't short any crypto, but
Yeah,
yeah,
I heard you say that.
and I think I think if you've got a really good entry, there's always a point where you know obviously people want to think a bit more long term, but for me, it's like it's so hard to get a good trade that I know it feels like you're taking some off too early, but it's like, hey, I made a really good trade today. You deserve to get paid for it. Now, whether that's like whatever, I don't know how big position you were that you put on, but if you just talk about the position itself, it's like, hey, right, if you put 50 basis points on and it's gone in the money straight away, paying yourself, taking of that position 5 or 10 basis points out of it, then great, that's a great trade, right? You can move on to another day. And I think that's the point is sometimes it's so hard. This thing is really hard. So when you get wins, you take wins, right? It doesn't mean you take it all off.
Yeah, it's just I'm having
I
trouble
would
trying to short. It's been about a month and a half, almost two now. It's just so much more different. There's so many differences, both the volatility and the retracements and everything. Uh, it's so much harder to short than a traditional equity, and that's what I'm struggling
yeah,
with. So I was wondering if you guys had any
I
experience on that.
I think as well, right? So let's take so you guys had Monday off, right? The markets were closed on Monday.
Yep.
So if you just talk about volatility, let's just talk like a bit more broad. Is effectively this week, vol traders have to fit 7 days of vol because there's things that happen over the weekend. They have to fit 7 days of vol into 4 trading days. Okay. And the difference with Bitcoin, especially if you're trading using an ETF, is that thing does trade over the weekends. So they have to manage the weekends into 5 days every week. Right. So that's the only thing. That's why I don't use the ETFs and things for sure, because it's trying to trying to put futures into an ETF when they trade on Sunday night is the same like trying to squeeze Bitcoin into an ETF, even though it trades like an extra 30% of the week. It has to factor in, the vol has to factor in the fact that it does trade 24/7. It doesn't just trade 8 hours, 5 days a week. Yeah, so I'd just be careful, especially here with the dollar being right at the top end of the range. So if you made a good trade and you got a good entry, then pay yourself. You can always come back.
Yeah, So if I kind of take that Chris. As always, great commentary. But if I take it a little bit more generalized to generalize the question there, Trillion, I would say anything with like higher beta or really really higher volatility, higher like realized volatility, you, especially on the short side, paying yourself a bit more quickly is much more prudent. Now, doesn't, as to Chris's point, doesn't mean you have to take the entire thing off the table. But again, if you got 25 bips on or 50 basis points on, taking half of it off the table or whatever the number is for you from a risk management standpoint. But the higher the volatility of that underlying asset, the more nimble you have to be, because it could just as easily be down. It could just as easily be down, 2%, or what was it, down like 1.62 today or something like that? Yeah, so like 1.5%, as it could be up 3, right? So, that's the big thing with like higher volatility assets, would be just from a risk management standpoint to be a bit more aggressive with them, but also understanding that if the price momentum starts to move negatively or positively, that again, those can really get going in those directions as well. So being kind of nimble as well in terms of, okay, like if I took some off today on Bitcoin, and tomorrow it kind of opens up sort of flat to up, maybe get a bit more aggressive with sort of shorting it, thinking that, knowing that we're kind of near the top end of the range, with that low end of the risk range down all the way down at like 20, was it today? 20,716. So pretty, from a percentage basis, that's what, like, sorry.
I've just realized trillionaires talking to thousandaire.
Yeah, I got the Bitcoin trend tracker. And
So,
I've been
you got like
incorporating that,
13%.
and that's really been helping me, identify.
Yeah, so you got like 13%. Exactly. So you got like 13% downside to like 5.5% upside, like ish. I'm rounding things off, right? Trillion, but yeah. So that'd be my main thing, right? And that statement goes towards any, whether you're shorting, really any piece of inventory. And just like it does on the long side in terms of adding to the position. So I made that comment earlier on here about the dollar, and perhaps having to be a bit more aggressive, a bit more quote unquote aggressive, right? When on kind of red days, when the price momentum is quite strong in that piece of inventory. And you saw a similar thing happen in gold, where it traded kind of down to sideways there after that initial run higher. But yeah, and you had some moments in time to kind of keep adding to it, but it didn't really hit the bottom of the risk range until most recently, in the last like 2 weeks. And even then, the price momentum has sort of shifted on the gold side. But yeah, that would be my kind of my take on, in terms of trading around a high volatility asset like Bitcoin would be
another way.
Yeah, go ahead, Chris.
Another way I try to show people, like, combining, it doesn't always line up, but about combining the risk ranges and ETF Pro, using like the daily and the weekly together. Because to that point, like if you had, I've got a video about it where I line up the two trades, and it's effectively like if you're at the top end of the risk range and you're also at the top end of the ETF range, so effectively daily and weekly ranges are both right at the top.
Oh, that's brilliant.
I would be more willing to keep the short on if those two had lined up the same in the opposite. So if it was a long and you were both at the bottom of the risk range and at the bottom of the weekly range, I'd be more likely to keep the long on far longer. Whereas if we're at the top end of the risk range, the daily range, and somewhere in the middle of the weekly range, I would be less likely to keep it on, because you're kind of in, on this halfway house on a different time frame. Does that make sense?
Yes.
It doesn't always mean that they line up. They don't always line up with the products that the both ETFs are covered in both. But that's how I try and think about it.
Yeah, XLK is a great example of that last week, where both the trend range and the daily risk range, basically the top end was 145, and we didn't quite get all the way there, but we got really darn close. And so that's a great setup from kind of like the short side in terms of taking that action. But now you've got the trend range at 145 to 129, whereas the daily is 134 to 142. So we are approaching the low end of the daily range, but we still have quite a ways to go, all the way down to 129 on that trend range. So again, just something to be cognizant about as well. So it's a really good call out by Chris.
Thanks. I really appreciate that. I just had one more question to ask you guys, if you don't mind. I know the defense stocks have been a trade that's really been working out great for a while. Just curious to know if you guys incorporate this strategy as well. So what I do is when I see these ETFs presented, and I'm in Canada, right? So it's I gotta have to factor in the dollar and everything else, as the other gentleman alluded to there. Um, when I have my pile of U.S. dollars, I try and go for a little bit more of a beta play rather than the ETF. So what I'll do is I will see the ETF that's in bullish trade that's suggested at the top uh, of ideas, and I will actually dissect the components of that. And so, for example, say Lockheed Martin is part of the defense ETF. I'll actually dissect and pick the different components that I like best from an equity standpoint within those ETFs, and then I will individually select those rather than buying the actual ETF. Sometimes is that something you guys do at all, or
100%.
okay? Thank you.
Yep. Yep. Don't have a whole lot to add, but absolutely. And I think, and you've seen Keith do it as well, where he'll be long GDX, but then add stuff like Franco Nevada, or not Fremont, Newmont or Barrick Golds, Kinross, stuff like that, right? So he'll dissect, or he'll take individual equities and components inside of the general miner space, right? Gold miner space, which has a positive signal strength, or well, it was actually went to neutral today, but the at least I think it was today neutral. But yeah, just to kind of finish off that point, Trillion. Yeah, he'll definitely do the same thing, and I know many here on this call will do that as well. Yeah, so hopefully that helped.
Yeah, thanks a lot.
And also on the short side too, right? So again, if we've got XLK, again, kind of a shitty example, but because we get Apple and Microsoft on a daily basis, but if XLK is kind of at the top of the risk range, and Apple and Microsoft are two biggest components, you can kind of compare and contrast, right? In terms of, okay, XLK is the top of the range, is Apple at the top of the range, right? Or is it probing like above the range from today? And if so, what do I want to do there? Do I prefer actually getting short Apple? Oh wait, no, it's like it's bullish trend. So maybe I'll just stick with XLK here, or like where is Microsoft within its range with XLK probing the top end? Is it just getting is Apple just propping XLK up? And if so, maybe again, like in that same vein of thought, like, okay, Apple's bullish, but with our outlook from a quad 4 standpoint, maybe I'll kind of front run that, but with a basket of other tech exposure, including Microsoft, which is bearish. And so I'd rather, be short XOK versus trying to pick the top in Apple. So like lots of different ways of kind of thinking about the not only the construction of the underlying ETFs, but also just how to play it. And Leslie mentioned this, I believe, last week or the week before about XLU and the component there. I think it's a massive piece. I'm drawing a blank on what the company is off the top of my head, but the XLU has a big underlying exposure to one particular utility company, and it's just been dragging the whole complex down. So again, just kind of being cognizant of that. And she mentioned it because there's a lot of equal weighted ETF, or there's a number of equal weighted ETFs out there. And, one of the reasons where she mentioned, I believe last week, is RYU is the equal weighted utility. And that kind of looks a lot different than the XLU. So again, just a lot of different ways of kind of playing that. Palmer, you jumped up. So why don't we kind of maybe wrap up with you, buddy?
Sounds good, man. Good, brother. How you doing?
I'm good, bud.
Hey, I was just going to comment a little bit on what Trillionaire said, just kind of the way I look at it. Of course, I use Biddy and Bido. I don't actually short Bido, but I have pretty defined rules on min and max on those positions, and I always treat Bitcoin like a commodity. So it's on Bido, it's 4% max. On Biddy, it's 2% max, and I have defined parameters. I use an Excel spreadsheet that basically takes, of course, I use the bridge bands and takes and calculates, where that position is in reference to either the top or the bottom of the range. And then when I get what I use for my oversold or overbought signals, I have, pretty defined percentages of what I'll sell. So that way it lets me keep something on. With regards to what Trillionaire was saying there, I mean, I think you have to kind of look a little bit longer term here. I wouldn't close the position out, but today where it's setting, I might sell just 15 basis points of biddy to reduce the position a little bit. But that's kind of the way I approach it. It's like Keith always says, you got to have defined mins and maxes, and this way I'm not thinking. It's the spreadsheet that I've developed just basically tells me the numbers, and all I got to do is press a button. So it makes it a lot more simple than having to worry about, should I take, how much should I take off here? Well, take some off and leave the position, never exceed the minimum. So.
Yeah, absolutely. Defined rules, right? So that we can preserve, protect, and compound that capital. Defined rules. It's very, very important, right, Palmer?
That's right.
Yeah. Awesome. Well, that's a good way to wrap up this evening. So thank you, everybody who joined in. We will be back at it next Wednesday night, or next Wednesday afternoon, 4:30. It's going to be kind of our regular time as it has been for the last few weeks. And yeah, so Wednesday, 4:30, weekly notebook review. We've got sector spotlight with the GLL gang, aka Gaming, Lodging, and Leisure, Todd Jordan, on Thursday next week. And then we're actually going to do a special edition on next Thursday night. I'm going to have Andrew Menaker. Some of you guys might know Dr. Menaker. We had a one-on-one. Trend Wizzo and I had a one-on-one with him about this time last year, actually. So it'll be really, really great to have him back on and to kind of help walk us all through some trading psyche and making sure to sort of capture our emotions, or sort of harness the emotions, really, is in terms of both positives and negatives, and make good trading decisions. So really excited to have Dr. Menaker back on, and then we'll be back with Beginner's Guide on next Thursday. Next Friday. Pardon me, next Friday at 11:30. So it's going to be a busy week next week, and yeah, back in full swing. So hope everyone has a great rest of this week. And if you're in New England, stay safe out there with the snow that's on the horizon. And we'll see you soon. Thanks everybody for their participation. Appreciate it.